Thanks for clicking. All eyes were on StatsCanada this morning as it was set to release Canada's inflation data for the month of August, with many predicting that inflation had re-accelerated. We got our answer at 8:30 this morning when StatsCan announced that Canada's CPI had accelerated to 4% in the month of August, with core inflation coming in much hotter than expected. Yet, the data comes amid new reports from RBC showing that consumer spending and the economy are both slowing and slowing fast. But, as we'll see, a slowing economy doesn't necessarily mean that rate cuts are coming to a theater near us anytime soon. So what I want to do today is go over Canada's inflation data for the month of August, take a look at some recent reports showing a slowing economy, and then discuss stagflation. The end of the month is fast approaching, and we're already seeing preliminary reports that Canada's real estate market is continuing to slow and slow down fast in September. We'll obviously have an update out on September's real estate market when the data starts to be released from the local boards. Click like and subscribe if you want to get those updates, but for now, let's get into this inflation data. On to the data. As mentioned, Canada's inflation rate came in much hotter than expected at 4%, up from the previous month's 3.3% and way up from the 2.8% that we saw in June. Much of the increase in the CPI is being attributed to higher gas prices, which saw their first year-over-year increase since January of 2023. Prices continue to increase for food, though at a much slower pace, rising at 6.8%. And slowing food price increases comes as Prime Minister Justin Trudeau just recently threatened the grocery stores with a tax increase if they didn't stabilize prices, after which the grocery stores promptly agreed to do all they could.
That was easy, wasn't it?
And while the increase in Canada's headline inflation data was widely anticipated, maybe not this high, but still widely anticipated, the big story is the increase in Canada's core inflation rate, our core CPI, which excludes food and gas. CPI median increased from 3.9 to 4.1 in August, and CPI trim increased from 3.6 to 3.9. This is the first increase in core inflation that we've seen in 2023, and, as we'll see, will definitely be a concern for the Bank of Canada. And the re-acceleration of Canada's core CPI data is exactly not what the Bank of Canada wanted to see, as it looks to CPI core when it's deciding whether or not to raise or lower interest rates, as articulated at its last policy announcement. And the one before that. And the one before that.
So what you're telling me is...
Following the release of the CPI, bond yields popped up higher, as investors now think there's a greater chance that the bank will in fact be raising rates higher at its next announcement. And I think it's worth noting that it's not just Canada that saw its core CPI measures surprise to the upside. We have to stop using that word. With US core inflation picking up speed last week for the first time in 6 months. And the hotter than expected core inflation data is likely to make the Bank of Canada rethink its hold at its next interest rate announcement coming up on October 25th. Yet the hotter than expected core inflation data comes amid a new report from RBC just released last week showing that retail sales have remained flat or declined over the past few months. Canadians are slowing down the spending. Further, Canada's unemployment rate is growing, our GDP growth rate is slowing, leading many to argue that a recession is definitely in the offing, that the much anticipated recession, the recession that the Bank of Canada has been trying to cause, is coming to a theater near us soon. Yet, as we saw today, inflation appears to be picking up speed, not only in Canada, but also in the US. And if we don't see some positive news coming out of the CPI over the next month, over the next couple of months, I think we're going to start hearing more and more about stagflation, which we're already hearing more and more about over in Europe. Stagflation, which we talked about before on this channel, characterized the Canadian economy in the late 1970s and early 1980s. Stagflation is low growth but high inflation and puts the central bank in a very precarious position. The central bank can't lower rates to stimulate growth, to stimulate employment, to stimulate investment, as that will put more upward pressure on inflation. On the other hand, they can't raise rates, or they're hesitant to raise rates, as that will push unemployment even higher and put more downward pressure on the economy. And this has been the worry from the very beginning, from the start of the rate hikes. Could the Bank of Canada get inflation back down to 2% target in time for the recession, which would leave it room to lower rates to re-stimulate the economy and let the normal business cycle set in? And while today's core inflation data, surprising to the upside, could just be a blip, and we may not necessarily be heading towards stagflation, if we do enter into a stagflationary environment, if we do get that low growth, that recession, combined with inflation, if historical data is any guide.
What the is that?
If historical data is any guide, the central bank will choose the inflation fight over the economy Inflation is an economy killer, whereas a recession can be fixed. Inflation has been the central bank's #1 concern, and absent a bank failure, absent a major economic collapse, pure systematic collapse, inflation always will be. Despite all of the predictions that we're going to see coming from the usual suspects over the coming weeks and months ahead, the central bank is very, very unlikely to lower rates just because a recession hits. They're going to want to see that inflation has gotten back under control as well. With that said, if today's data showed us anything, it's that it's an uncertain time, and we'll continue to track Canada's inflation data, its economy, and of course the Bank of Canada on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.